How's it going, everyone? In this video, I'm going to talk about how I troubleshoot bad performance spells. So currently, I am in a bad performance spell, and while I was kind of pissed at first, I realized that it actually might be a pretty interesting opportunity to examine my process and share with what I do. If anyone out there is also having a bad spell now or in the future, I hope this can serve as some sort of guide and some sort of method that you can use in order to figure out what the heck's going wrong. So let's start with some of the context here. Now, I'm going to move back in the calendar in this little corner over here. From the 10th to the 21st on my day trades excluding SPY, I won over 90% of my day trades, had 12 wins, 1 loss, a couple of scratches. And then in the next 2 weeks, my stats were completely flipped. I had, out of 18 trades, 5 wins and 13 losses and a couple of scratches. So what the heck went wrong, right? What happened? What changed? Now, the first thing that obviously changed is that the market was a little bit bearish. But it was also bearish heading into a little bit on this day as well, on the 21st. So market obviously a lot more bearish. And when I look at these past 2 weeks, okay, it was a little more bullish, a little bit more neutral, kind of light volume, floaty. So that obviously changed. The second thing was that I sized up. And the reason I sized up was that I determined by the end of February that I've been trading high size, and then it would come back to maybe 1 share, and I would do really well, and I'd hit a spell of, I'd kind of fall into this cycle, which I'm going to describe right now, where I'm doing well. I have a nice stretch of performance over a couple of months. I think, okay, well, I'm doing pretty well, and it doesn't feel like a one-off. I'm going to increase my size. So I increase my size, but I am a little bit too rigid with my trading ability, with my methodology, and I get burned by some market move. So I get burned, and then because I don't want to lose any more money at greater size, I come back down to 1 share. And I think, okay, well, I'm just going to hone my skills, go back to the drawing board, see what I can kind of figure out here, and then I build myself back up, and then the same thing happens. So that happened maybe 2, and now this kind of marks almost the 3rd time. And, you know, that's fine if you're learning and trying to figure stuff out, but I made the goal at the beginning of this year to double my 30K account. And at the rate I was going with that process, there was just simply no way that I would do it. I would have to completely nail my swing trades, right? If I have a couple of 3 or 4 swing opportunities, I got to make, 25% of my count on those opportunities. And I'm not saying that isn't possible, but it just puts a whole lot of pressure on those situations and waiting for those situations to come up and really nailing them. And you're also probably going to have to trade with much larger size as well, versus maybe a fixed 1x risk for a standard position size. So that's kind of the context here. So this time I decided to do something a little different. Now, I scaled up to, on my day trades, about $150 of max risk, so about a half size versus a swing trade. Just think about 30K account. 1% of my 30K account is $300, so that's my max risk for a trade. I think keeps it pretty clean, pretty simple, and it helps me know, how much I'm likely to lose in an absolute worst case scenario. Now, I'm not even at that level yet for my day trading. I'm at $150, and for some more context, last year when I was changing my scaling, I've traded everything from 1 share to making, putting my entire account in a single day trade. So I've kind of traded across the board, and this is a nice little middle ground for me. So I know that I sized up, and I'm trying to figure out, okay, well, I sized up, but why am I losing all these trades? Because it doesn't feel like nothing is changing from the surface, right? I'm taking these trades, opportunities look good, market looks good. So what the heck is going wrong? So what I did was I put all of my trades in this table, and I'm going to make this a little bit bigger just so we can see it nice and clearly here. But I put all my trades in these tables. So these are all my non-SPY day trades for the past 2 weeks from the 24th to the 7th. I'm going to get to these color codings in a second. But I graded them on a couple of criteria. And these are quasi-objective, I will say. So good D1, good N5 are a little bit more explanatory. So let's take a look at Hershey. And let's just go over this example here on Hershey. Oh, didn't mean to zoom in there. Or maybe I should do a more recent trade. Let's do a more recent one. Let's do IBM because that's a little more recent M5 chart. I don't flip back as much. Okay, so here's IBM on a D1 basis. Okay, so this is a pretty good D1 chart considering the fact the market has sold off really, really hard. Tech has sold off very strongly. If you look at QQQ, has a lot more relative weakness versus SPY. And if you look at MAGS has also had a bit of a sell-off, although I think it's finding a little bit more relative strength recently. But that being said, IBM is holding up really well relative to SPY and is coming off some very clear support from this earnings gap. That's coming into play right at call it 247. Okay, so good D1 chart and has room to the AVWAP E, the 8 EMA, as well as this resistance level kind of coming around 265. That's the first thing, okay? Above all the SMAs, right? Pretty clear skies. Now look at the M5 chart. And let's just look early in the day, right? Here's the M5 chart on that day. Pretty orderly price action. There is some retracement in these bodies, but for the most part, lots of green candles, not a ton of overlap into the prior candle. And we get a nice little pullback over here. That is one great entry point on the stock. So when I say a good D1 and a good M5, I'm really looking for, okay, D1, just a nice, a very classically textbook strong D1 chart for the most part. There's always going to be some contextual elements. M5 chart, I want good volume. I want some good volatility. I don't want a stock that has fallen, 30% or something like that. It's fresh out of a pullback or breaking out of compression, is close to support, and has plenty of room to go versus any D1 levels, and just has a bunch of clear skies. There's no trend lines. There's no horizontal supports, no SMAs. That's kind of coming in the way here. Okay, so I think these two are a little bit more self-explanatory. The next one here is the entry. So when I think of the stock criteria, I'm thinking basically there's a couple of parts here. You have your setup, you have your entry, you have your management, right? And then you have your exit. So to me, how do I do this? Your setup and your entry, these are the two things that you can control. And ignore the conditional formatting there. But these are the two things you can control, which is what stock do you pick? So what stock and when do you enter, right? That's pretty much what you're doing here. And once you have these two things, it makes managing, so right, adding or scaling out, and exiting a lot easier. So I'm really focused in this chart here. I'm focused specifically on these two things. Now the setup is broken down to a couple things. First, just what's SPY doing on the setup basis. So what's the market setup here? Maybe I'll just put it over here, right? So what is SPY doing? SPY D1, right? SPY M5. Can't type. But this will basically determine, okay, well, what is the best opportunities to look for, right? And we want these to be ideally aligned. So right now, if we take a look at the market right now as of March 11th, long-term bias, I would say, is mildly bearish because we still have to wait for the strength of this bounce. If it's something like this where we get a really big drop and then a strong bounce, right? This starts out bearish and then it gets a little bit more, a little bit less bearish because the bounce has been so strong. So to me, I'm mildly to pretty decently bullish. And if we get a very strong bounce, then I'm a little bit more to the sidelines. If we get a really wimpy bounce that maybe lands somewhere here, right, like doesn't even get back to the 100-day SMA and starts to stall somewhere over here, maybe doesn't get back to that election gap like 585. That's what I'd like over here. Then that's a pretty wimpy bounce, and then my long-term bias is super aggressive. Our short-term bias is very bearish over here in terms of this move, right? This is a very bearish move, but this is kind of depends how you define your short-term bias, but our very short-term bias over here is saying, all right, well, we made a deep drop. We're wary for any sort of capitulation low. We're shorting bounces, and we're looking for a deep drop before we can get long. Deep drop and a very strong move off of that deep drop before we can get long for a day trade or maybe an overnight swing. So this kind of determines whether I should go long or I should go short, and when I should enter my longs and shorts. This is the backdrop in which we take the trades. And we can't really control this. We just have to identify what's going on and then find the best type of setup to take advantage of that opportunity. Now, the entry-wise, this is what it kind of goes into here. The entry is one, the stock cycle and the SPY cycle. So I drew this lovely Picasso over here on my Microsoft Paint to illustrate very generally what I'm looking for. Market pulls back, stock is flat. As soon as the market finds support and the stock breaks that compression, I want to enter over here. I should probably use a different color. Right? So I really want this to sync up. And the reason is because if we have the other scenario here where the stock is up and the market is up, I don't know if this has relative strength. I feel like I'm I don't know if you've ever seen those old Khan Academy videos, but I think he's using Microsoft Paint or something. But anyways, right, this allows me to clearly see relative strength intraday, and I can line this up with the move. So that's kind of the idea with syncing up the entries. Right, I'm looking for, okay, on the stock cycle, the stock is pulled back and I'm ready to join that short-term trend. In the market cycle, the market has made a down move and I'm ready to join that current trend for the day. Or maybe if it's flat, right? That's your other caveat over here. So what I did was I went back and for all these trades, I graded them and I basically said, look, yes or no, did it have all of these criteria? And try to see where it happened. So much to not really my surprise, my D1 and my N5s are almost always pretty good. Like I'm almost always picking pretty good stocks with room, with good D1 charts. That's rarely my error. A couple times where it's like there's some questionable things. I'm not going to get into TGTX really, but I have some comments over here on when I did. Typically on the D1, it's usually if I miss some D1 level here. And then Lily was kind of a choppy chart. So those corresponded with these orange tags. Orange means that, hey, man, you really shouldn't have taken this trade because you didn't even get this first part. This first part wasn't what you wanted to do. So had to get out. Now, the second part I'm looking for, okay, on the entry, right, did I sync it with the stock and did I sync it with the market? And it looks like for the most part, I did sync it with the stock. I wasn't really pushing, doing trades that I wasn't syncing in with the stock. But where I was weak was that I was not syncing in with the market. See, only about, how many yeses do I have here? 17 total, 1, 2, 3. I'm going to count this up the old-fashioned way. Okay, so 8 times out of the 17, I actually was synced with the market. And with this, let's see, 1, 2, 3, 4, 5. I should really just do this. There we go. Right, and then I do this. All right, there we go. So here's where I see where my error is. 65% of the time, my cycle is synced with the stock. 47% of the time, that's 50% of the time I'm synced with SPY, and this has been my Achilles heel. So I've not been syncing with SPY, and I have all my results over here. So if I look at just all of my wins, right, take a notice on all of these wins here, and here's my scratch. So when everything lines up, I've not taken a loss for the most part. And even if you take these out over here, where these are kind of like continuation trades. So I'm syncing with the market, and even though it's not the perfect quote unquote stock cycle entry, it's still a pretty decent entry. These aren't super big Achilles heels, but when I'm when I'm pretty much not synced with the market at all. Whoops, that was a no. So when I'm not synced with the market here, bunch of losses, some scratches, doesn't go my way. So this has been the problem. And I've color coded on the right over here. These gray ones are these marginal trades. These are like your 65% win rate trades is what I like to call them, where they're just good enough where like they might work, but they're not really good enough for you to rely on. So, they're just the marginal trades where it doesn't quite sync up over here. So that's kind of the highlight here. And I like having this where it's like, all right, I know where to look and I know what to watch for. And today I actually applied that knowledge in one of my trades. So I'm going to give a live example of how I actually apply this today. So I came in today, started off the day kind of late. I knew that I woke up and I wanted to work out. And I knew that because the market made a pretty big move yesterday, probably didn't have to rush into trading because it's probably going to be a day of rest ahead of CPI between a big move. So I'm like, look, I'll get to the market when I get to the market, and then if I get a bounce that I can short, then I'll short it. And if I don't get a bounce, then I just won't take a trade. So I was looking around and I'm like, all right, look, SPY is moving down lower here. This is nice, but I got to the market somewhere like here, and I was like, I missed my opportunity to go short. And you might say, hey, what about all of this move? But I'm really trying to nail this entry point here, right? Especially in these choppies market. I'm not trying to get it in here and here. I'm trying to get it in right when that move starts up. That's when I feel the most confident. That is my setup. And that's another important point that I'll drive home at the end of the video. But how do I actually apply this? Well, I was like, all right, I'm looking for this, and this is going down over here. So like, let me find some shorts, and I'll wait for a bounce. So I found some shorts, and I was looking around. There's a couple nice ones. I've highlighted them over here, but I did like Illumina. It's actually fairly weak considering that the healthcare sector has been fairly strong, although it's gained a little bit of support the last couple of days. I like this bearish hammer here. Try to rally up here. Got smacked down really hard on some pretty nice volume. Looked at the price action intraday. And I liked what I saw. Look at this, right? Just steady selling, especially while the market was bouncing up over here from 1040 to 1140. If I look at this from, here's 1040 to 1140. Drops down lower. So pretty nice stuff. We get this nice, long, strong move over here. This is kind of where I find it. And I know this is finding some support at this low from a couple of days ago right over here. So I didn't need to chase this stock, and I'd actually rather get in on a pullback because it would provide me two things, which was room to this low, which is not a very strong amount of support. Just a temporary bit of support after a very strong and a bit of a climaxy move here. So I get an Illumina, and then I see this. I see this at 130, and I'm like thinking, ooh, this is looking pretty good. And here's the market at 130. I was like, I'm liking this. I'm like, market's moving lower. It's kind of a grindy move. Illumina's pulled back, but looks like it's ready to go. Now's my time to get into the trade. But then I was like, hold on a second. Illumina is doing this. Here's Illumina. Here's SPY. So I missed my chance. I missed my window, right? Where was my window for Lumina? Well, my window was during a contra move. I need to see relative weakness. So during 1040 to 1150, 1155, I had a window to find relatively weak stocks. And in that window, I could have entered Illumina maybe here. Let's call it right here, 1120. Why? Well, I'm getting pretty good breakdown over here. We got a nice drop. Stock is not rallying with the market. We got this pop at 1105 that kind of synced up with this pop, and then market stalled, immediately faded down and made a new low of the day with some room to the gap. So I see this move, broke through that compression. This is a nice, perfect stock cycle entry point. Now, if I look at this over here, what am I getting? Well, so far I'm getting a move over here through VWAP. It's looking a little bearish. Market-wise, it's a little bit early, but it's already shown some relative weakness. So even if the market trickles a little bit higher, I should have some cushion on this trade. So I get some follow-through, we fill in the gap, and then we get the sell-off, and then we get a nice bullish engulf at this level right here at 1220, and that's where I can take my gains. So where I found the trade is where I would have been taking gains had I entered far earlier. And that would have been a really nice win. Would have been like $2 on that guy. The other entry point over here was 1025, but could I enter it here? Well, probably not, because it was showing relative strength at 1025, and the market was going lower. So I had no way for me to tell if this relative strength was, if this was the real deal in the breakdown, or if it was just getting dragged down from the market over here. So that's kind of the case study here. And when I saw this, I'm like, okay, well, I have this little move here, but, you know, it didn't quite have this long. I needed to just stall out here, form a double top, and then kind of roll over and break compression. This is not that kind of time. This is not the time I was looking for. It's a much longer move. And we did break through this upward sloping trend line, but, you know, this is not really the move I was looking for here. And I knew that I would be kicking myself if I didn't wait for a bounce. So I decided not to enter. And then 2 bars later, I was like, whew, I'm glad I didn't enter, because then I would have been kicking myself because I would have been using this as support, and then I would have breaking that support. And now I'm really scared. And I'm like, well, is it going to continue higher? Market's going higher. What do? I avoided all that situation by just waiting. And then now let's look at Illumina here. Okay, well, Lumina's compressing here at 3 o'clock. It's getting a little late in the day. But it's not really rallying with this last leg of the market. So it starts to stall out at 210. And then here's the market at 210. So this last leg of the rally, the market does, Illumina starts to stall. And I'm getting the relative weakness. So now I would feel way more confident about taking this. I did not take the short. I was at a meeting, and it was kind of late in the day. I didn't want to hold it overnight. But this is the process that I would go through. And when it broke down over here, I would totally take this as a short. Why? Well, now we got the low minus breach. We got a double top. We got a bit of consolidation over here. We're back and through that day. And look at all this room I have to this low. I got about $1.50 to the low over here. And it had a little pretty decent follow through on the lows. And there's a good chance of testing it tomorrow, depending on how CPI does. So notice how, right, this was something where I was like, it's almost like it, right? It's like that margin trade where it's almost there, but then I realized, you know what, this has relative strength, and I want to short a stock that has relative weakness. It's as simple as that. It just this little bump in relative strength told me that it's not the time to enter the stock yet. It's still in its pullback phase. And to go back to my Picasso example, right? Illumina is here, right? It's going down. Maybe I'll put this in red because it's a bear, okay? So ILMN, right? It's going down here, and it's coming back up over here. Then it'll consolidate, and then it'll drop and move lower, right? So I want to enter in here. But where I saw it was over here. So, and for me, like, I don't like to take this heat. I like to wait for the move and enter as soon as I can. So I feel like I'm not guessing, oh man, you know, where is the bounce going to stall? Where's it not going to stall, right? I really try to surgically attack those entry positions on the stock. And you can see here's what the market did. Just kind of draw this line. It went up, down, up, and then higher again. So here's the market here, right? It went, if I were to sync it up, went here, up, down, up, and then down again. And so, right, that's where you see the different entry points over here where these cycles sync up and you're able to get it in. And I was just out of sync. Plain and simple with the market. I was taking too many longs in situations where I should have been looking to short failed bounces. And granted, last week, there were more opportunities to get long, but I really didn't have a lot of excuse, I felt, in the first week. Let's see, this is March 4th. Let's go back a couple of days here. Yep, so beginning of the week. Let's go back to the beginning of last week, where I still felt we were in a range kind of day. And, right, we had a big move here. Should have been looking to short this drop. We get the drop over here, waiting for the bounce to kind of short and fail. I didn't get it. We got to move up over here to 600, kind of fails. Okay, you short this bounce. So you got to short over here. You can maybe take a relatively strong long here, but you got a short there. Maybe a short over here. If it's producing, starts to crack down below this low minus, end of day short. This is kind of a harder move to trade. A little end of day long here. Kind of hard to trade on the long side. You want to just wait for these contra moves to run their course. And I entered a long, but I entered too early, and I had to withstand all this heat, and mentally it was not something that I wanted to do. Short over here, right? Contra move. Now you can get long over here, and get long over here, and get short over here. So just kind of playing each side of the move here. Wait for the bounce to stall, get short. Wait for this move to fade, get long. In a nice gap and go, you could trade short over here and take gains to the climax. Short. Kind of how it goes. So just plain and simple, out of sync. And when I'm sizing up here, it's typically just what happens where, I'm a little bit more conscious of the higher dollar amounts. More of my account is in the trade. There's more movement back and forth. In terms of, right, maybe I'm not just risking a couple of bucks here. Might be going up $10 or $50 or something, moving up and down. So a little bit more conscious of the fact, and you're not able to kind of sync to the trades and kind of get all the check boxes where you want it to go. The other thing I want to talk about is also how it impacts your confidence, because really, at the end of the day, winning and trading is all about confidence in your ability to find picks and feel like you know what's happening. And that word "know" is a interesting word when it comes to trading, because we don't know we trade in the probabilities, but you have to know those probabilities. In other words, what has the market done? Where is it likely to go? How confident am I that it's going to go in that direction? And based on that, what's the best opportunity for me? And it's hard when the market's changing and there's different pieces of the puzzle and you're sizing up, because now when you're risking more money in the line, it is essentially saying that I'm this much more confident in my analysis that I'm willing to put in more money. And I didn't quite appreciate the difficulty of that until I tried to do it last year, and even a little bit now. And the important thing right now is, when you do this and when you're scaling up, you need to know two things. That one, you've won consistently over a consistent of some substantial period of time, right? So you've hit that 75% win rate for 3 months. And two, that you're unlikely to blow up my account. So I know those two things are pretty much set in stone from last year, so I'm not worried about blowing up my account. I am more focused on figuring out what's going wrong and just getting a more consistent performance throughout the year, regardless of market condition. That's really my goal. All right. So final thing, I was watching a Twitch stream with Ryder and Isadora. They're talking about some stuff, And, Israel mentioned he was sizing to full size, I believe, after 2 great months, which is awesome for him. And I've watched a couple of his videos, and I was curious to see what they're talking about during their live stream, what they're looking at. And one thing that Israel said that I felt struck really true with me was how he was talking about how he needed to see this exact setup for him to feel the most confident in a trade. It had to pretty much manifest exactly. And it was just how it bounced through VWAP, how it was rejected, what was the stock, and everything has to be, all his ducks had to be right. It had to be the perfect setup for him to take it because he's now trading more money. So, if it's slightly less than perfect, you're going to convince yourself all of these reasons to get out of the trade because you're afraid of losing money, right? You don't want to be hurt by the fact of losing money, and more importantly, what that loss of money represents to your achievements, to your goals. And it made me think, I was like, I've just been trading a little bit out of the loo here. I've been a little bit too fluid when I need to maybe clamp down a little bit more, especially if I'm sizing up, and really make sure that I'm nailing in my entries and just making sure that everything is set up perfectly. Like all of the tumblers are aligned, as Pete would say. So outside of this Excel sheet that I made, which helped me analyze the problem, second thing I did was I just went to my PowerPoint, my day trading challenge, and I just kind of wrote down, all right, here's a couple of setups, maybe 3 setups that I really like, right, that I find I kind of go to and I feel very comfortable with. And one is obviously just simple VWAP bounce, bread and butter trade, very easy to spot, easy to set alerts, easy to get into. Give a couple examples here. Here's BJ. Here's Futu, which I still don't know how to say. Here's MRK on the short side, which I actually put these arrows in, I think, when I added almost every time except that last arrow over here. So this is a classic example here. eBay as well. Entries on these guys. So just some examples. Okay, well, look, here's a VWAP bounce. This is a pretty easy setup. This is a setup that I like to trade pending the price action is consistent, right? Notice all these clean charts. They have heavy volume. They typically have good relative strength throughout. So that's the first one. Second is certain continuation moves. Now, I've traded these a couple times in the past, and these are all trades that I've either spotted or have taken personally. So IBM, I took on Friday. Carvana was one I took a couple weeks back. I took it here. There's a 50 SMA over here. So I'm joining that trend at a favorable price. IBKR took this one in January. Strong move. And this is a bit of a misnomer, but you kind of see how just the price compresses and holds all those gains. It doesn't get back to VWAP, and then it has this clean breakthrough. And then that's really when I like to enter the trade, because I know that, all right, here's my pullback, and we didn't get any knockback down to VWAP versus what we saw over here. So this sort of like inverted, this kind of like inverted L pattern. I think I drew it over here, right? This sort of shape move is one that I really like. Last one here is just kind of these relative strength grinders. And this is kind of a hard one to quantify, but typically, I think MSTR on this day was a good example where it had a strong move the prior day, and the market was going down at this time. This is on you can check this out. This is on the 5th, I believe. It was going down, and this stock was compressing, and it was just making some higher lows over here, kind of in this wedge, and then it broke out. And I think Pete took it here, and I took it here, but, I like these where it's clearly relatively strong, but it's not diverging and moving out of the gate. It's kind of synced up with the market. So that means I can enter it with confidence, knowing that buyers are in here. And as long as I get the market timing right, I should have a pretty good chance of getting in on MSTR. The second thing is this stock actually also manifested another move later in the day. This was a pullback move that I could get in and enter on off of support. So another entry over here. And this was a kind of a gap fill reversal. That's one of the gap reversal fill. One of the setups I like, but it's a similar concept where it's just kind of grinding and picking up relative strength. And then when the market's ready, we get a really nice release off of that. And PLTR was a similar example. I took this the other day. I took it here, added here, and I took gains over here. So, yep, these are the 3 setups that I like. And then when I was looking at Illumina today, I was like, you know what? Illumina, it has not met these setups. And I have these setups here, and I can look at them when I am unsure about taking a trade in the moment, right? And it's just retraining myself on those good habits. And that's what it comes down to. So to conclude the video, this is what I did personally to figure out what's going wrong. I looked at 2 weeks worth of data. I evaluated all my trades. I saw what the problem was. And then today I was able to put that into motion by not trading, right? A lot of decisions you make is, do I take this here or do I wait later? And I waited later, and then I was positively reinforced with that decision. And it's just building that with more money, right? And the next time I scale up, that could still be a problem. You know, it's good. And I don't want that to be a problem, but it may still be a problem that I got to be on the lookout for and figure out what the heck's going on. So that's the end of the video. Hope you guys found this very, very helpful. And I think there will be better trading ahead for me. Usually these kind of spells have lasted 2 weeks on average. And then I do this exercise and I figure it out and I get back on track. So still bullish on myself for the year. And I hope this is very helpful to anyone who is struggling out there right now or in the future. Thanks for watching.